It used to be a kind of axiom that higher oil prices are a positive for the GCC, and I don't know if we can take that entirely um, wholesale anymore. A few weeks ago, the idea of $100 barrel oil would have been thought really kind of impossible if we're in the middle of another financial crisis. But now that OPEC is taking another interventionist stance in energy markets, it's coming back into more serious consideration. And I think at a more technical level, you're going to see more widening out of time spreads in the oil market, which are going to point to the substantial tightening that is going to be happening. So the backwardation, the difference between near and longer dated prices, is going to widen out more considerably on the back of these cuts taken by OPEC plus. So if you think about most of the economic actors in the UAE, for instance, most of them would have energy costs as an input. So higher energy costs are going to be a drag on activity at a time when inflation in other sectors is already high, when interest rates are also quite high. So having to endure higher petrol costs, higher costs for diesel, higher jet fuel costs that could all come in on the back of a higher crude oil narrative, that's not necessarily a positive for the economy in the region. High oil prices certainly are good for governments in this part of the world that still rely on oil income as a big part of their fiscal accounts. But even so, that has lessened substantially if you look at it over the last 10 years. So the reliance of countries like Saudi Arabia, like the UAE, Oman, Qatar, Bahrain, they have all taken substantial fiscal reform steps to move away from really needing high oil prices to sustain their finances. We expect the trajectory for oil prices to be going higher over the rest of the year from where we are now. So the volatility in financial markets, I think, caught many of us by surprise, including our team. And so at that point, it didn't look sustainable that our much higher projections for oil prices could hold out. So we actually revised them lower a few weeks ago. But now we still have an outlook for oil prices to get, at least in the Brent market, to get to $90 and above in the second half of this year. And I think the steps taken by OPEC Plus really help to reinforce that view.